Good morning, everyone. Welcome back to our weekly stock market update video. This is where I do analysis on overall market, give you S&P 500, as well as the Max 7s. We're looking at their price action, so you won't lose money on trying to short the top. And we're keeping things simple, where we follow the price action. And let's get started with data real quick before getting to the technical analysis. So fear ingredient index still bobbing around the same, 70-something. And if we start to come up closer to the extreme greed, obviously then we can potentially look for a contrarian trade with the price action. Make sure we stick to the price action. Don't just blindly short because it's extreme greed. Same thing with AI system data. Last week, I talked about this being a little bit less than the 40s. I said that this is actually good for the bulls because things are actually becoming more bearish as things hit all-time highs. That means that more shorts are going to get squeezed out. Similar idea this week. So what do you want to see is the high 30s to potentially mid 40s, and you're seeing everyone bearish. Not bearish. Everyone bullish on the same boat while we're hitting all-time highs. Then that may potentially, that's where we may get like one of those big drawdown days. So far, we're not seeing that yet, and market is continuing to slow grind up. So just follow the trend. In terms of earnings, we will have big tech, Apple, Amazon, a lot of market movers this week, so be careful. Meta as well, and Microsoft, pretty much all the Max 7s. Google reported last week. They had decent earnings. And yeah, a lot of market movers this week. If you have, Apple have a bad day, then you can have a 3% down market as well. Vice versa. And in terms of economic data, jam-packed as well, right? You have job openings on Tuesday, and FOMC rate decision is going to be on Wednesday as well. So currently it's a rate hold, and core PCE Thursday, as well as non-farm and unemployment rate. All these will move the markets. In terms of rate cuts or rate holds, it's currently a 96% rate hold, so it's probably going to be just a Q&A, right? You go and probably more questions and answers for the next meeting, see if it's going to be a rate cut or not. Currently, for the next meeting in September, is pricing a 62% for a rate cut. That'll be the first cut that we got since the last cut that we got all the way in last year, around October, I think. So it'll be an interesting meeting. So we'll have to see what the Q&A ends up being like. All right, let's get into the charts, technical wise. All right, so every week I talked about bare minimum for bears, what I want to see from the bears for me to potentially become a bear in short. And every week they don't show it. So let's continue to do the same thing. So bare minimum for bears that I want to see is just break this tail looking line, EMA 12, right? EMA 12 is a very small EMA. So if you can't even break the 12, what is bear even really doing, right? It's not like this line is EMA 50 or something, right? So bare minimum, if the moment you want to stop the momentum for bulls, right, just break the EMA, right? We've been bouncing off it pretty much every time, and we're continuing to make higher lows and higher highs every time. Higher lows, higher highs, lows, higher highs. Just means it's an uptrend, right? This means every low is a higher low. That's why they call it higher low, because the low is higher than the previous low. So it's still an uptrend. That being said, obviously we're being extended. Extension could stay extended for a long time. Doesn't matter if RSI it's overbought, right? It could just cool down in one day or go sideways. Next thing you know, it's cooled off, and next thing you know, we're overbought again. And I talked about this red line too, saying that right, anybody could draw a little bit differently, and it would just be don't trade off of it. It's just more of a visual guide. It's pretty much just the prior all-time high to this all-time high. And yeah, we slightly poked above it, but even if we come back down next week, it's fine, right? It's not like, this is not like a 5-minute chart where it's poked above and you're like, it's done. This is more like a longer term, kind of like a visual guide where it's like, okay, maybe around this area is going to be some resistance, because there is no real resistance when we're at all-time highs. I wouldn't be surprised if we come up maybe a little bit more, depending on how earnings goes. Come back a little bit, back test this prior all-time high structure, and bounce around. Maybe go sideways here, form a bull flag, and see where it goes. Right? If we form a bull flag on the monthly charts, like let's get a monthly bull flag, right? Um, here to here. So major from bottom of the move to the top of the move, and we form a monthly bull flag. It would coming back up to here, 505 wouldn't be, wouldn't be surprised. A 10% pullback, right? It's not that much. And we back test the low, which would be the low of this structure, right? This all-time high structure. It will come down like this, chip chop, come to the all-time high structure, bounce a little bit, go a little bit lower, and then form that bull flag sideways. And then we'll see if it again end of the year Christmas rally or something like that, right? Which is pretty similar to back here, right? Big 1, 2, 3, 4, 5, 6, 7 month move, right? And where we went up 47%. And we had 3 months of pullback. We formed a beautiful monthly bull flag, and then boom, another move up, another monthly bull flag here. And this was not a bull flag anymore. But said two, right? 2 monthly bull flags here. Similar look, right? From bottom of the move to top of the move, about 41%. So keep an eye watching that. We are kind of reaching to that zone where it's like, okay, let's say it goes to 47, right? And 47 versus a downside of 10. So it's 7 to 10, right? It's up to you. But I wouldn't be swinging up here. But if you're a day trader, you can trade all you want, whatever area. It doesn't matter. But if you're like a swing trader, getting along here is not really that nice of a risk reward anymore. So let's look at the bare minimum for a SPY. Same thing. SPY is continuing getting rotations, right? Tech sector, semiconductor has been a little bit weaker. So that's why kind of like Qs are going sideways a little bit for this week. And then while the Qs are going a little bit sideways, SPY is getting that rotation, right? SPY has the financial sector doing strong. And right, these are all the sectors. If you guys want to screenshot that, right, financial sector is doing strong. Healthcare is doing strong, right? So it's like, that's why SPY is making all-time highs while Q is going a little bit sideways this week. So yeah, this green line is pretty much just all-time high, prior all-time high, prior all-time high, back to all the way prior all-time high here. So nothing fancy, but let's keep an eye on watch. Maybe we did poke above it for one day. Thursday, you see a tiny rejection there, right? But Friday, we end up closing above it. So continue to follow the trend as long as we are making higher highs and higher lows, right? Stick with the trend. So bare minimum, what I want to see, same thing. Break this EMA 12, right? I want to see a big drop below it, at least under one structure, right? This is the current structure, the last structure that's built a long way up. So this, and right, so for the Qs is actually a little bit here because we went completely sideways this week. So at least bare minimum break below one of these structures and give me enough space to short, right? If you gave me enough space, big enough drop, this, I would be looking for a short on the lower high. Punching at the lower high, then we would look for that lower low. But if you give me like 1, 2 puny days, right? What is this? 0.4%. And the next day was like what? Probably another 0.4%. How is anyone gonna short here, right? There's no room for bears to short the lower high, right? It's like you get one green day and there's no more space for the lower high anymore, which is exactly what happened, right? On Thursday, next day, bounce just 0.6%, and then we're back above the highs. So yeah, but if we get a big enough drop, right? Let's say we get like something like this, 2%, 2.3% day or something. That's still not that big, but let's just say we did 2.6%, and then we get a weak bounce, and then now this whole structure has resistance, right? You zoom in into the shorter time frame on the 15 minutes or something, and you can see like all those resistance, rejecting, whatever. You get in a short, decide to get in a swing short, open, put a stop loss over it, and then it rejects. And then this whole area acts as resistance, and now it rolls over. Now it becomes a lower high and lower low. Now we have daily downtrend confirmed. Then that's likely potentially marking a shorter term top. Right? That'd be like the ideal case for bears, right? You want a big drop, crack below at least one structure. When it bounces, that structure acts as resistance. For now, we don't have any of that, right? We've been just getting these tiny drops that doesn't even really matter. That doesn't create any space for bears to short or lower highs, anything like that. So yeah, so it's okay to miss the first move. I'd rather miss the first move on the way down, right? And then you short on that lower high because you don't know. You don't know where that first move is going to be. Could have been here. Could have been here. You said could have been here. Could have been here. But then you lose money all on the way up if you continue to short every single try to short all these this entire time essentially. So right, even when we kind of like this, right? Get a big enough drop, and you try to short for a low high, right? And then you get stopped out. That's fine, right? But at least there is some sort of selling here, right? And then you finally see this, and then you short the lower high. Then you got a lot of fall through, right? So you can miss even if you let's just say you miss this whole move, and then you short the lower high here, right? You still caught this move. There was a tiny lower high here, but it's very, it's like right here, right? It's very it's a bit ambiguous, but see how you got a 1, 2, 3, 4 day drop, and this bounce is pretty much like a tiny, puny looking bear flag, but I wouldn't really call it bear flag because they didn't really flag. It just went one day and then it rolls over. So you could have shorted here, here, and then probably made your year if you held the whole thing all the way down to here. But yeah, but you guys get the idea. Big enough drop, right, to give us space to short. Otherwise, really, what are we looking at? Just 100% bulls straight up, and nowhere flex at this moment. So pretty much what I talked about the bare minimum is what I want to see on the other side. But for bulls, is really clear: higher highs and higher lows, and continue to bounce off the EMAs and continue to go higher. And every structure you guys built along the way is acting as support, right? Just look at this, how clear it is, right? Resistance, resistance, resistance. Now this is the structure that's built, right? Broke above it. Guess what? When we pull back, this exact low is bounced off of prior resistance, prior resistance, because price is above it, bounced off of that support. Classic example of resistance turning support in a bull market, right? So as long as bulls continue doing that, right? Let's say you come back down a little bit, go sideways a little bit or something like this, break above, right? Now this is prior resistance, pull back, now it's acting as support again. That's how all these higher lows and higher highs make. So yeah. Let's take a look at the MAX7s, give us more clues. Maybe the time cues may pull back or not. So let's take a look. Okay, so Meta's a little bit weaker, still staying a little bit weaker. Right, so we talked about this last week, saying Meta was the only one that has a daily downtrend confirmed, and we were saying to see if we get some follow through, but it looks like the market held itself up, so Meta kind of held itself up as well. But that being said, you can see, right? This is what I want to see. If the market looks like this, then you can short that lower high like here, right? This is what I was talking about. Big enough space, bounce, you can short the lower high for the lower low. Similar idea here, right? This bounce, see how bears are shorting the lower highs? right? You can see this area, right? Because there's space, because we got this big drop here, enough space for them to short when it bounces. And these tops were pretty much just these prior areas, right? So acting as resistance. So if Meta continues its daily downtrend here, then we may come back down to test this 692s. And it has earnings coming up too, so be careful if you're playing this. And we've seen earnings pop and drop over 10% these days, so don't be surprised if something bad comes out or something good comes out, right? It goes 10% either way. But yeah, Meta is the only one in daily downtrends. If all the Max 7s look like this, that daily downtrends, then I would say market put temporary top is likely coming in. But at the moment, the rest of the Max 7s aren't as weak as Meta. I wouldn't call this weak either, right? We're sitting near all-time highs. It's just that this is only one that has a daily downtrend. That's why it's a little bit weaker. But that being said, break below a structure, right? This is the last structure built along the way. Guess what? This support is exactly off of this structure. So what you want to see is, as a bear, you crack below this low and then crack below this structure right here, around the 677. Then bears have a lot of space to work with. There's not a lot of support here, so it'd be easier to crack through down to 640s. But they have to break below this 680 zone first, which we'll see. All right, let's take a look at Tesla. Still tightening up. So it's getting really tight now, right? We talked about this tightening range together for months and still tightening up. So, right, big move up, big move down, big move up, big move down. So each move does not exceed the prior lows or highs. Big move up, big move down. So, and another move up on Friday, and then we just touched short of the resistance. So I'm guessing we're probably just gonna go like this next week, and then at one point it will break one of these lows, right? Then we'll see if it gets follow through on that side. So let's say it breaks. Let's just say it breaks bear, right? It breaks this low. This earnings reaction low. And when it breaks that low, we want to see it breaks this at the same time because it's so close, right? You want that momentum to pick up around this 295. And you want to see follow through. If we get like one big green red day, and next day we just kind of come out like this, that would mean that there's no follow through. And if you give me a pattern where it forms for many, many months and it breaks and it has no follow through, you want to play the other side. Similar idea, right? If it breaks bull here, say it break about this 335, right? Breaks bull, you want to break this other pivot right away. Not like right away, but like you guys get what I mean. I'm gonna try to get there as soon as possible because it's like a momentum break, right? This pattern formed for many, many months, and you tell me that it breaks out, and you can't even break this first, other, second pivot, then that's a little bit of a red flag. So you want to come up here, break that pivot, get maybe like tiny pullbacks, and then continue to go really higher. But if you get something like break, no follow through, then that's likely a sign that we might come down lower. Similar idea, right? Break down here, no follow through. Probably we're gonna bounce. So yeah, still continue to tighten up. We'll see which way it breaks. Probably in the next coming 2 to 3 weeks. Probably 2 weeks, or maybe next week because we're literally just a few percent away from each side. But yeah, perfect. This is perfect picture, perfect tightening range, essentially. That's been forming for months. All right, take a look at Amazon. No signs of a flag still, right? That's what I've been saying, right? Meta's the only one that has a daily downtrend. Look, while you go to Amazon, Pro here just hit all back tested. prior all-time high level. So, right, this is a low of the structure, this is the high of the structure. Pretty much we tapped into the structure and pulled back a little bit. I want to call this a rejection because we moved up 1, 2, 3, 4, 5, 6, 7 days right into it. So a little bit of pullback is okay as long as the trend's intact. And we continue to grind up the EMA 12. Same thing, bounce, 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 bounce off of it. No signs of red flags. What would be a red flag would be next week we get more follow through on downside. So after this pullback, we come down, break the EMA 12, come back all the way down to 223 here. That'll be a lot of space for bears. We're likely to get a bounce here because of the structure. And we'll see earnings. How can earnings go? But for now, no signs of red flag yet. Yeah, just straight up. Higher highs and higher lows. Let's see, Google here. Yeah, same idea. So this high pretty much tested this all-time high structure, right? Sellers here, all these sellers here, rolled over, a little bit of sellers here, right? So no signs of red flags either. As long as Google's always in an uptrend, no red flags. That being said, what you want to see as a bear is same idea. Big enough drop, give me space for the lower high. Something like go all the way down to 180, right? Prior resistance is going to act as support likely. Bounce here, get a weak bounce, and then we break through this green line where we bounce off of it like 6 times. Then that's likely where market's going to pull back as well. So keep a watch on that. We did get a lot of selling volume right on Thursday, but we moved up like for two full weeks into resistance. So a little bit of selling, it's not surprising. What you want to see is bears actually follow through on it. So I have to see what early next week shows. All right. Okay, so Microsoft actually reached this green line in one go. Wow, that's insane. From here to here, 50% in one straight move. So this green line is pretty much prior all-time highs, and to this prior all-time high. And it decides to actually touch it. So let's take a look. Okay, so it's kind of a little bit of reaction here last Friday and a little bit of reaction this Friday. So maybe this line will become valid. Right, it's so far as 3 touches after here. But I don't like to count this yet because what you call it? Because this could just be like this next week, right? It could break out and bounce and go around this or something like that, and then it would just be a useless line. That's why I don't really trade off with diagonal lines. But anyways, for visual guides, I always talk about diagonal lines for visual guides. That being said, I wouldn't be surprised if we do pull back here after a 50% move up, and that goes straight up into the only resistance that I can see. You can do fake extensions, all that kind of stuff, but yeah. But that being said, higher lows and higher highs still intact. EMA 12 hasn't even broken once yet, so bulls are in full control. So what you may potentially see here, if bears do show up right here, is a potential head and shoulders. So what do you want to see? Big enough drop, right? Come break down all the way to near 500. Bounce again, get a weak bounce, form that right shoulder rollover, right? head and shoulders, then we'll have it daily downtrend confirm. And then we'll probably get, if daily downtrend confirms here, then we'll get some weekly consolidation on the weekly time frame, which is very due, right? Like, come on. Like from here to here, one straight weekly move, right? I wouldn't be surprised if we didn't pull back to 464 or even like 480, just like weekly MA12, right? That's like a very extremely healthy pullback. We pull back to 480 here, and then go sideways here or something like that, right? Maybe form a weekly bull flag. Let's just measure the weekly bull flag here. One sec. Okay, weekly bull flag goes all the way to 457. So bull flag is considered a very healthy pullback, right? This obviously doesn't have to hit that yellow box. For a monthly bull flag, 452. Right? It doesn't have to hit the yellow box. It can come out like this and then bounce and still be a bull flag, right? But yeah. So I would say next week, key watch, keep an eye on Microsoft because this guy, when it pulls back, I would say out the Max 7s, when pulls back, it's probably Microsoft's going to pull back pretty big because of the size of the move. So also earnings are coming up. So let's see if it can hold this whole move. Yeah. Okay. So we got like say a 5% day, right? It wipes out everyone from June 24th. So that's about a whole month of 4 weeks of longs will get wiped out here if we just get one red day. Not even that big. Okay, just 5% red day. So we'll see how earnings come out. Probably people are, yeah. But that being said, could have said the same thing over here, right? That's what I said. Every week we talk about the bare minimums for bears to show up, and they haven't done that yet. But yeah, this is pretty much the only week that we see it being a little bit red, like this little blip here. But yeah, that may shape out this head and shoulders if we get some kind of pullback here. So keep my eye watching here. You can see every week we're just kind of like making higher lows and higher highs. But this is the only 2 weeks that's been kind of like going sideways and rejecting an area, right? So that's kind of like the very tiny sign that this may be slowing down, right? And then what we want to see is bears prove it, right? Give me a big enough drop. Okay, I'll look for that lower high for that right shoulder to short. But again, earnings are kind of like in the way, so I wouldn't even try to short it because if you short it here, right, and then let's say it Monday, Tuesday, Wednesday, whatever, red day, and then get a weak bounce, and then you short it, right? Try to short for low high. Next thing you know, earnings comes out, stops everyone out, right? Because it goes up 5% and then pulls back 3%, and then pulls back another 6, right? Then you're stopped out. And it makes this big upper wick or something. Then it just doesn't make sense. So I'll wait for earnings to come out first. Right? It whips people out both ways. All right, let's take a look at Apple. Okay, still just right underneath here. Really not doing anything. It looks like it wants to break out though. Right? This is the only time after we tested this resistance that it's holding right underneath it, right? Big move up, shallow pullback, another move up, tiny pullback versus touch, rolls over, touch, rolls over, touch, rolls over. So looks like it wants to break above it over here. But that being said, also its earnings is coming up. If it breaks above it, I'm looking at 223, which coincides with 221st and then 223. And this green line as well, which is just the downtrending line for this. If it rejects from here again and then rolls over earnings, then this should just be continuation of a main trade, right? Very clear, strong support down here. But I wouldn't be surprised if it bounces here first. A lot of resistance here. Now it's going to act as support around this 204 area. It's a big week for earnings. So, all right, Nvidia. So, similar idea to Microsoft. Man, 82%. Okay. But yeah. But still no signs of slowdown really yet. Higher lows, higher highs. Every time bounces off the EMA 12. No, no reflex. Except, I wouldn't say it's a slowdown here because, yeah. No signs of red flag, yes. Yet. What do you want to see as a bear? Similar idea. Just break this EMA 12. Right? And then when it rolls over, when the EMA 12 curls over, you want to see X resistance. When it bounces, act as resistance. For now, still no enough space, right? 2.5% from Nvidia is not enough space for bears to really short. You see, it just bounces back all the way back in one day, right? Like there's no more space to short. It's not like 2.5% on the Qs. This is a little bit different, right? This is Nvidia. So yeah, as long as it continues, it bounced because I think Google was talking about they have more demand for AIs too. So Nvidia got like a sympathy play. So keep an eye watch on the other MX7s when they do report earnings as well. What they're talking about, the demands for AIs will likely move Nvidia as well a little bit. So yeah, a lot of data is next week and a lot of earnings next week. So big week for sure next week will likely dictate the rest of the summer, the direction for it. So yeah, because if all the big tech reports bad or not as good earnings, then it will likely be more like a sideways from now on, like a pullback and then sideways. So it'll be like a sideways, right? Kind of action. All right, that's all I got for you guys. Feel free to ask any questions. Feel free to support the channel, Patreon link. And if you guys want to learn more about how not to short the market while it's going up, check out my Patreon page for one-on-ones, or book that for a 15-minute free call with me, where we talk more about your issues or what you want to learn. And I'll see you guys tomorrow for commodities update.